Hello, friends. Welcome to Stockoni. So, imagine an economy where companies are growing, earning at nearly 20% every year. Could you invest in it? Let's find out. So, the news and updates and the highlights for today trades. Ramco Cements. Ramco Cements, they are going to increase the production capacity to 30 million tons with an outlay of rupees 1000 crores. Nalco, despite US tariff hike, there is a report coming from the Nalco. There is nothing to worry. They are moving to UK market because the tapping is because it's zero duty over there. Lloyds Metal. So the company has emerged with a successful bidder for the Tansy coal mine, and Indian Oil, they have signed an MU with Air India, okay, for a substantial supply of aviation for the aviation fuel. Next is on the mid cap stocks. So these are the mid cap stocks which have recorded highest ever growth. Laurus Lab, they have their earnings has increased to around 1203%. Hitachi, the net profit has increased to 1163. Steel Authority of India, it has jumped around 110%. So basically all this company plus Hindustan Petroleum Corporation, they are reported the earning around 548%. So all these companies net earnings have or the net profits have massively increased. The earning per share has increased, okay. And uh, uh, and this has happened this quarter, so this stocks maybe in will be the highlights, okay, for this quarter. Okay, now discussing on the most important part over here, like can earning really grows 20% annually? Okay, so uh, how is the market going and how it will go in next few months or few years? Okay, so we'll discuss about that. So what is the big picture here? India is one of the fastest growing economy globally, okay, and the analysts have projected that the CAGR of Indian companies are around 18 to 20% of most of the companies. Okay, so this is good. So earning, so any company with a 18 to 20% of earning, okay, their compounded annual growth with 20% is really good. Okay, that means their ROE, ROC will improve. Okay, then strong GDP, middle class consumptions, government reforms. So basically now the middle class consumptions will increase, and the reason is the GST. Okay, that is going to be implemented in Diwali, and based on that, when the consumptions will increase, the earnings will increase, the earnings will improve. Okay, and the most important part here is S&P upgraded India's longest term sovereign credit rating from triple B minus to BBB with a stable look. So what that mean? That means to us that Indian stock market, that is the companies listed in stock market, right, are healthy. Second thing, India growth is healthy from the economic point. It will go great, okay. And when there is a stability in any of the company, right, or in your or any of the country, okay, that country will grow. Okay, and this S&P upgrade, they have upgraded after 18 long years. So this is massive news for all of us, friends. Okay, so why institutions are bullish? First is the GST that was discussed, and that was announced by our Prime Minister on Independence Day. Okay, the SIP has surged to around 20,000 crore every month. Okay, sector growth are seen on autos, financial consumptions, real estate. Okay, and it is because of the GST impact. And the last final thing, S&P, the driving factor that will drive Indian companies to new highs. Okay, so what we should do from the investing perspective, we should focus on the large cap sectors and also on the mid cap sectors which are delivering good, basically which has a good growth story, having good net earnings. Okay, we should focus on that. And most important thing, friends, if anyone is investing, right, they should not invest in only one sector. They should focus in all the sectors. Basically diversify. Diversify your wealth in a way that is there in all the sectors. Okay, whether it is real estate, whether it is chemical sector, whether it is pharma. Okay, please diversify your in all sectors. Okay, that is most important thing. And yeah, we can expect short term corrections but stay long term invested. As I said in earlier videos also, none of the stock, none of the companies go straight high. It will come down. That come down part is the profit making part. Okay, but if the companies are doing good, they will obviously go up. Okay, so with this I will close my thoughts. India growth story remain intact. 20% earning growth over the next 5 years. Long term investing is better than short term investing. I mean, short term trading, we can say. Okay, if you invest for a longer duration, certainly you will get good amount of profit. Okay, and finally, kindly like and subscribe if you like the video. Thank you very much, friends.